Right, good day all, good afternoon, good morning, good evening, wherever you may be. This is Zaheer Anwari from the Traders Cosmos. Just a quick sound check to see if you guys can hear me okay. Can you see my screen okay? Hello, hey Joe. Hello, Rick. Great, looks like we are live and we are good to go. Fantastic. Okay, I think we are good to go. All right, brilliant. Hi, FX Boyke. I hope I'm getting your name correct. Okay, brilliant. Thank you so much. As I said, my name is Zaheer Anwari from the Traders Cosmos. A bit of an apology for my last webinar. We did have some sound issues, so unfortunately that was out of my hands. But hopefully today we won't have those same issues. So what we are going to cover today is pretty much what we were going through last week. It's obviously going to be recorded and on the website for you guys to watch again. Okay, so just a big brief background about myself. I am a trend trader, so I do look for long-term positions. I'm looking for positions that last for days to weeks to months. So a very sort of different approach to day trading. There is a place for day trading. There's a place for trend trading. It really depends on what style you are looking for. And so hopefully what you'll see through my webinars is a different style of trading, because there's a lot of stuff out there on day trading and scalping, but not so much on long-term trend trading. Okay, so that is pretty much the message I will be trying to get through on the webinars that I'll be doing moving forward. So what are we going to cover today? Well, first of all, we'll do a review of my screen setup. We'll then be creating a watch list from the review. So how do I choose the currencies that are tradable and not tradable? We will then be going through the topic of today's webinar, which is optimal entry points. Ultimately, what we're looking for are high probability setups, an entry that's got more chance of returning me a profit than a loss. Okay, sometimes it requires a bit of patience when looking for these entry points. So that's what we'll be covering today, optimal entry points. We'll then have a brief summary of the key points, and then we'll go through some questions and answers. Now, I can see the questions coming through, and if there is a question that comes through that's relevant at that particular moment, then I'll answer that question. But if there's a question that I see come through, I may leave that to the end of the webinar. So there will be time at the end of the webinar. So if you do have any questions, just type them through. Okay, right, let's go straight to my screen setup. Right, so what you can see in front of you is the software that I use, which is eSignals Advanced Get. And in front of you is a very typical setup of what my screen looks like. So on the left-hand side, I have my watch list. And you can see here, it's quite an extensive watch list. So it goes all the way down to the South African Rand, Japanese Yen. So I look at everything from the exotics to the South African Rand, Japanese Yen at the bottom. And in front of you also at the top, we've got the weekly time frame and also the daily time frame. So the weekly time frame is Big Brother. So the weekly time frame is basically giving me trend direction. Is the market in a bull trend or a bear trend? So, you know, the overall market direction. And at the bottom, we have the daily. The daily chart is where I look for my entry and is where I manage my stops. So let's look at the weekly time frame. I'm just going to open that up. Now, currently it's the naked chart. So I'm going to load up a couple of indicators on here. The first indicator that I'm going to load up is the 200 moving average. Now, the 200 moving average is just basically a major area of support and resistance. That's all it is. So when price gets anywhere near the weekly 200 moving average, there is a potential for it to bounce to the upside. And when it comes down, there's a potential for it to either break or bounce to the upside. In this case, you've seen that price is broken through and is below the weekly 200 moving average. So the weekly 200 moving average is an area of support and resistance. I also use these pink lines. So these pink lines also represent major areas of support and resistance, but what they represent are the highs, the lows, and the closing price of the previous years. So if you look here, we've got the PH high at 1.06 0.01. This is the pink line high of 2013. As we are in 2014, this is the pink line high of 2013. At the bottom, we've got the pink line low of 2013. And just above that, we've got the pink line close of 2013. To the left here, we've got the low of 2012, the close of 2012, the high of 2012, so on and so forth. So these represent, for me, as a trend trader, major areas of support and resistance. Also, to simplify that even further, I only take the previous 2 years into consideration. So as we're in 2014, what I'm looking for is 2013 and 2012. Also, what I like to look at is round numbers. Now, round numbers also act as areas of support and resistance and potential target levels. So what do I mean by that? Let's have a visual idea of that. Imagine price is below your floor in your room. Price is below your floor. So the floor is currently acting as an area of resistance. When price breaks through that floor, your floor now becomes an area of support. So where is price now likely to head to? Price is now likely to head to your ceiling. So that is the next round number. So if you look on the right-hand side, what we've got is 0.9 right here. And price is above 0.9. So what I'd like to see is price head towards the figure 1. However, we've also got this pink line in the way acting as resistance. So what we'd like to see is price head towards the pink line, break this, and then head towards the weekly 200 moving average and the figure 1. When it breaks the figure 1, then it's got these pink lines to contend with, but ideally we'd like to see it head towards figure 1.10. Okay, so round numbers act as good potential target levels. Now, if we go down to the daily time frame, the pink lines basically represent highs, lows, and closing prices of previous years. Now, when I say closing price, I mean 11:59 p.m. on the 31st of December. That's the closing price. And then the highest price reached in that year and the lowest price reached in that year. So major areas of support and resistance. If I just compress the page, you can basically see how price sort of tends to stay between these levels. And if it does break the level, then it creates new highs and new lows. So 52-week highs and 52-week lows are very important and very significant levels for price action. And that's it for the weekly. Very, very simple. Now, the daily time frame. Again, what you're looking at is the naked chart, but I do load up some I do use some indicators on here. So the first indicator that I use is the daily 200 moving average. Now, the daily 200 moving average also acts as an area of support and resistance. You can see that here, price trended away, pulled back to the daily 200 moving average, found an area of resistance, and then trended back down again. So the daily 200 moving average does act as an area of support and resistance. However, there's also one other use. When price is below the daily 200 moving average, that is considered a bear market. And that is when we're looking for shorting opportunities. So below the daily 200 moving average, this is where you want to be trading. Now, at this point here where price is pulling back, this is where you don't want to be trading. The market's going up, but you're below the daily 200 moving average. When it bounces and starts heading back down again, this is where you want to be trading again. So when you're below the daily 200 moving average, that's a bear market. You want to be looking for shorting opportunities. Now, if you look at recent price action, we've now broken the daily 200 moving average. So this is now considered a bull market. So what we're looking for is buying opportunities. This philosophy that I'm using the daily 200 moving average, this is a philosophy that's been in existence for a very long time. This is not something that I've created. If you've heard of the turtle traders used this philosophy. They used the daily 200 moving average to give them a bias in price action. When price was below, it's a bear market. When it was above, it was a bull market. Now, if you look at this pullback took place from September all the way through to sort of October, November times. You're looking at a good 2 months. So what you're in this period right here, you'd be standing aside. You wouldn't be doing anything. That is a simple moving average. Okay, it's a simple moving average, 200 simple moving average, guys. Okay, I hope that makes sense. Now, let's move on. I'm going to add on another set of indicators. these colored bars. These colored bars are a proprietary indicator provided by Advanced Get, which is XTL. XTL stands for Expert Trend Locator. Now you can see that what it does, it gives you these colored bars, red, black, and green. The logic behind this is very, very simple. Now, when price is in a bear trend, the bars are red. When price is in consolidation, the bars are black. And when price is in a bull trend, the bars are green. So what you're looking for is basically price below the daily 200 moving average and red bars. And when price is above the daily 200 moving average, you're looking for green bars. So you can see in recent times, what we've got is a daily 200 moving average. Price is broken above. We've got green XTL bars suggesting further strength possibly. So things are looking interesting and a potential trend reversal here. Okay, and now one other indicator that I'm going to load up is the subchart indicator, which is Get Stochastic. Now, people are familiar with stochastic in that it being an oversold, overbought indicator. So when Get Stochastic is overbought, what we're looking to see is a reversal into a bear trend, and when it's oversold, a reversal into the bull trend. Now, price action always comes first. Price always comes first, not indicators. Price always comes first. A lot of the times, overbought and oversold indicators only really give you breathers in a trend direction. So if you are in a downtrend and stochastic is oversold and you start buying, the potential is that could be short-lived, because that could just simply be a breather. If you look here, we've got a breather before a continuation of the downtrend. So we need to be a little careful with these overbought, oversold indicators. Now, Get Stochastic is very good. The reason why Get Stochastic is very good is because it produces this false bar reading, this black line at the top. Now, what that means is ignore the fact that Get Stochastic is overbought. So if you look here, Get Stochastic is overbought. So a lot of people would be looking for shorting opportunities. However, what Get Stochastic is saying is that even though this is overbought, the black bar means ignore this and go in the direction of the trend. And currently the trend is up. It's a bull trend. So we don't want to be going short based on stochastic being overbought. We want to be going long based on price action. And you can see that stochastic is producing this false bar. So it's also saying to go long, not to go short. Okay, I hope that makes sense. Now that is a typical chart setup for myself, and that is how simple I keep my screen setup. Okay, let's move back to the presentation. Can you guys see the slide? Could you just let me know if you can see the next slide, please? Okay, brilliant. Thank you. Okay, I'm just aware of a bit of a delay going on. Okay, so if we move to the review, so let's have a quick review of this. So the pink lines represent highs, lows, and closing prices of previous years. I'll come back to that question, Dhruv. I'll come back to that question, okay? So pink lines represent highs, lows, and closing prices of previous years. And these are the major areas of support and resistance that I take into consideration. And also the previous 2 years are the ones that I take into consideration. So as we're in 2014, 2013, 2012 are the ones that are important. The weekly 200 moving average acts as an area of support and resistance. The daily 200 moving average acts as an area of support and resistance, but also gives us a bias in price action. So when we're above the 200 moving average, the daily 200 moving average, we're looking to buy. And when we're below the daily 200 moving average, we're looking to sell. So it gives us a bias in price action. What is a bull market? What is a bear market? Round numbers, very important. So when price breaks one round number, say the figure 0.90, we want it to head towards the next round number, which is figure 1. However, between the round numbers, there could be pink lines, there could be weekly 200 moving average. So we need to be aware of the previous support and resistance levels between those round numbers. Okay, this is a good question. The most previous set of pink lines is for 2013. 2014 will be plotted when 2015 comes into play. So currently the pink lines, the most recent pink lines are for 2013. You're welcome. Right, XTL bars, they give us a bias in price action. So when the bars are red, we're looking to sell. That's a bear market. When the bars are black, we're standing aside. That's consolidation. And when the bars are green, that's a bull market, and that's when we're looking to buy. And of course, we finally got get stochastic. Now with get stochastic as trend traders, what we're looking for is that black line, that false bar. So when we're in a bull trend, we're looking for a black line telling us to ignore stochastic is overbought. And when we're in a downtrend, we have to ignore stochastic is oversold, and we're looking for that black line as well. So either way, when we're in the trend, we're looking for the black line. XDL stands for Expert Trend Locator. Amit, it's the colored bars that were produced, the green, the black, and the red. Okay, right, now let's move to this Word document. Can you see this Word document, please? Please let me know you can see this. Yes, yes, okay, brilliant. Right, now, that indicated the XTL comes with e-signal. So everything that I'm using comes with e-signal, okay? So it's not my own indicator, so it's stuff that you can subscribe to, and you can get the XTL and the get stochastic indicator. Okay, right, now if you look at the Word document in front of you, what we've got is the weekly, we've got the daily and the trigger, and then we've got pink line, so PL stands for pink line, weekly 200 moving average. Sorry, let me just change this. Weekly 200 moving average. RN stands for round number. Trend. On the daily, we've got the daily 200 moving average. We've also got trend. We've got XTL. We've got get stochastic. And then in the trigger column, we've got status and we've got price. Okay, and on the left-hand side, we've got the watch list. So let's start with the Aussie dollar. How would I fill this in? So if we just go back to e-signal. Okay, so what we've got is price action at this level right here, which is 0.93. Where is the weekly 200 moving average? Well, the trend is very much up. So we're looking for price to continue. So if it does continue, the weekly 200 moving average is here. So this is a good 700 pips away. So pink line, weekly 200 moving average is 700 pips away. The next pink line is this pink line right here. So you're looking at 0.933, 0.583. So what we're looking at, around 200 pips, something around that level. So 200 pips is the next pink line, 200 pips. Right, round number. The round number is here. So the figure 1.000. So here's your round number. We're at 0.93. So again, we're looking at about 700 pips because it's in close proximity to the weekly 200 moving average. So that's about 700 pips away. So trend, what do I mean by trend? Well, trend, what I'm saying, is it more likely to continue or is it more likely to bounce? Now, why not 0.9400? What's that for? As a round number? Yes. Okay. Guys, remember, if you take every figure into consideration, you'll always be worried about what is a support and what is a resistance level. Round numbers are 1,000 pips. So if you look at this 0.9000, this is a round number. So the next round number is the figure 1. Beyond that, 1.10. Before that is 0.80. I do not consider 0.82, 84, 86, 88. I do not consider those round numbers. That's just price action. So if you're looking on an intraday level, then you're going to get bogged down with too many support and resistance levels, and you then find it very difficult to allow price to develop as you're constantly worried about support and resistance levels. However, if you look at price action here, look at this trend. This trend started at 0.80 and went all the way through to 1.10. That's a good a description of a trend or an example of a trend. So 0.94 is not a round number. However, if you look at this level here, it is a major pivot level. So it is something that we want to be a little bit aware of. Now, I don't take too many pivot levels into consideration, but this whole area is in a range. So we've got a range zone here, we've got a range zone here. So we do have a pivot level here that we do want to be slightly aware of. So potentially, I would not want to start buying into this until we get a break and a close above this resistance level. So going to the weekly 200 moving hour average, going back to the weekly chart and this table, I would say there's more chance of a bounce than a continuation. What we're looking for is a continuation. So in this case, there's a chance for price to bounce to the downside as opposed to a continuation. Okay, now if we go to the daily time frame, what do we have? Well, daily, we are above. So if we're above the daily 200 moving average, we are in a bull market. So we're above the daily 200 moving average and we're in a bull market. XTL, as we know, is green, and get stochastic is giving us a false bar. Right, we've got green XTL and green XTL, and get stochastic is also giving us a false bar. So the daily chart is actually looking very good. So status. Now I tend to have a traffic light system in my status. So green, it's good to go. Amber, standing aside for something specific to happen. And red, just not tradable. So for status for the Aussie dollar, US dollar, for me is amber. The reason why it's amber is because on the weekly time frame, this is acting as an area of resistance. Once price breaks and closes above that, then this will turn to green and we can start looking to trade this to these levels here. So for now, the Aussie dollar, US dollar is an amber setting. I hope that makes sense. Let's go down to the Aussie dollar, Canadian dollar. Okay, so Aussie dollar, Canadian dollar. Let's start with the weekly. We're above the weekly 200 moving average, so that's acting as support, but we're wedged between this pink line and acting as resistance, and the weekly 200 moving average acting as support. So Aussie dollar CAD, pink line, yes, immediately there's a pink line. Weekly 200 moving average, it's currently about 150 odd pips away. So that's 150 pips away. Round number, well, here's a number one. We want price to head towards 1.10. That is the next round number, which is all the way up here. So potentially we want price to develop all the way up to here. And we've seen that it has happened in the past. Not exactly 1.10, trading is not an exact science, but it has reached those levels. So we want to see price break this pink line and head towards these pink lines here. So the next round number is about 900 pips away. However, currently there is a very good chance that price is going to bounce to the downside because this is acting as an area of resistance. And you can see that price is currently struggling. We've just got dojis and indecision. We really need to see strength and we need to see this pink line taken out. Okay, if we go to the daily 200 moving average, we're above the daily 200 moving average. So we are above. If we are above, then this is a bull trend. XTL is black, telling us we're in consolidation. And you can see very clearly that we've had a trend. After every move, we have pullbacks. These are breather areas. This is natural market movement. We've had green and then black. You can see that price is currently breathing. That's because it's broken this pivot level here and it's coming back to retest it. Again, that's very natural for price to do that. So we've got black XTL bars and we've got a false bar reading on get stochastic. We've got this black line. Someone's just asked, what is this black line? That black line is the false bar. That's telling us to continue long, not to go short. So XTL is black. but we do have a false bar reading. So what does this mean? This basically means this is an amber setting for me. Why? Because we've got this pink line acting as an area of resistance. Once this gets broken, we're then looking for trends to develop to these pink lines here. So there is potential for the pink line to be broken. We can see that the trend is up. There is a breather area at the moment. We need to see further strength. Once price gets above this level, we can start going long. So this is on my amber watch list. Okay, let's have a look at something else. Let's have a look at the pound Canadian dollar. Okay, so let's start with the weekly time frame. Pound Canadian dollar. Guys, look at this. A very good example of a trend. Started in April of 2013 all the way through to now. This is a trend. So if we look at the weekly chart, we are above the weekly 200 moving average, and we're above all the pink lines. So the pink lines are of no concern at the moment. However, what we do have is a round number 1.8. Price is coming back to retest it. And what we should like to see is price bounce to the upside and head towards the figure 1.90. So that's about 800 pips away. So going back to our chart, which is the pound Canadian dollar. Okay, so pound Canadian dollar. The pink line, no problem, no concern, as they are all acting as an area of support and we're above those. The weekly 200 moving average also is of no is of no concern. Round numbers, excuse me, we're at 1.8. The next round number is 1.9. So that's about 800 pips away. All right. Yep, and the trend, well, we want to see a continuation. That is what we're looking for. Now, we are above the daily 200 moving average, which means we are in a bull trend. So if we go to the daily 200 moving daily chart, we can see we're above the daily 200 moving average. So that means we're in a bull trend. However, look at XTL, black, which means consolidation. If you look at the actual trend, we've got lots of green, then pullback, green, pullback, green, pullback. However, we've had consolidation for a pretty time now. And that's natural, that happens. Price is not always going to trend. Trading in general is about patience, and that's something that I'm trying to promote here. What we're looking for is this bull trend, this strength which is coming in today to continue, break these pivot levels and continue to the figure 1.90. If you look at get stochastic is now oversold. This is good. In a bull trend, this is good. We want this to be oversold because we want to see this continue and see further strength in the market. So going back to this chart, sorry, let me remind myself. XTL is currently black. Get stochastic is giving us oversold, which is great. Status, this is red for now. I'm not interested. It's not red. There's nothing of interest until this actually breaks out. So I'm waiting for a breakout. This is red. Okay, now, unfortunately, I've only got about 45 minutes in this webinar, so I can't go through everything that's on my watch list, but I hope this gives you an idea of how I look for ultimately what a confluence of events. I'm weighing up the probabilities in my favor. So ultimately, what I'm looking for is on the weekly, all of these are on my watch list, by the way. I have an extensive watch list. I don't just look at 2 or 3 pairs. I'm not a Euro expert. I don't just look at the majors. I look at everything. The bigger the portfolio, the more chance you have of finding opportunities and the more chance you have of making money. And ultimately, the name of the game is to make money. An extensive portfolio is going to do far better than a portfolio with just 1 or 2 or a handful of currencies. In addition, I apply the same principle to stocks, commodities, all the other markets. I do not limit myself to Forex. Okay, so going back to this, I hope this gives you an idea of how we build up the watch list and the look for entry points and these probabilities. So what we're looking for is a continuation pattern on the weekly. So we're looking for price to be above all major resistance levels, and we're looking for the same on a daily, and we're looking for entries and triggers with XTL bars and get stochastic being in line with each other. All right, now guys, can you see this next chart, which is about optimal entries? Yes. Okay, brilliant, brilliant. Thank you. Okay, fantastic. Okay, there are some good questions coming through. I will answer them in a second, FX Boyke. Okay, I have seen that. Now, if you look at this chart in front of you, what you see is green XTL bar. So price was black. So we had this range. Then we had green XTL bars. We've got get stochastic giving the false bar, suggesting it's oversold, but to ignore it and to go long. However, what we have is the figure 0.90 acting as an area of resistance. So I'm not going to go long until price breaks this. Now, if you watch this little video, okay, here we go. Now, price breaks the round number right there. So we've got a break. Now, after every break, we want to see a retest of the round number. So price continues, breaks, and then pulls back to retest. Oops, sorry, excuse me. Let's do that again. Right, after every break, price comes back to retest that round number. So we've got a break and a retest. Now, when we get a retest, we want this to act as a support level, and we then want price to bounce to the upside and break this pivot high. If I continue the video, you can see that price does break it and creates a new high. So what we're looking for is a continuation pattern. This is a flag, a break of a round number. Now, this doesn't just have to be a round number. This could be the weekly 200 moving average, the daily 200 moving average, a pink line. It could be any major support level or resistance level. So what we're looking for is a break of that resistance level, a pullback, and then the next breakout. The next breakout is our entry point. If I just go to the next screen. So this is how it is. This is our initial entry point. This is an aggressive entry, that first breakout. Now, the first breakout is susceptible to fake breakout. So this is not always the correct entry to take. We then want to see a pullback, which will give us a second entry point. The second entry point is a pullback entry, and that's a conversation for another webinar. Right, we're then looking for the bounce and a break of the pivot. So this is the pivot high. Now the pivot high will give us two further breakout entry points, number 3 and number 4. Number 3 is when price breaks this pivot, and that will take you into the market. That's an aggressive entry. The fourth entry point is a close above the pivot. Price action breaks and closes above. You will then use that bar as your entry point. So a breakout could be number 1, which is aggressive. Number 2 is your pullback, so we'll ignore that. Number 3 is your break of the pivot. And number 4 is a close of the pivot. So 3 and 4 are both slightly more conservative. So you've got aggressive, slightly more aggressive, and very conservative. Okay, what we're looking for is entry point number 4. Entry point number 4 is our conservative entry. This is one where we've got the highest chance of returning a profit without getting stopped out. Right, so let's go back to e-signal. So if we look at the Aussie dollar, let's have a look at the Aussie dollar. So this is looking like the kind of continuation pattern that we're looking for. If I just expand that, we had a break of the daily 200 moving average. We had a pullback to retest it. Now, remember, trading is not an exact science. It's not always going to come back to retest that level. It'll pull back and then break out. Now, we've got the breakout that we're looking for. So we're waiting for a break and a close above this level. If price breaks and closes, we can then potentially use this as an entry bar with price 10 pips above as your entry, and then your stop. Again, stops are a topic of another webinar, but my stops tend to be about 200, 300 pips. Your stop should be below the daily 200 moving average in case it comes back to retest. Okay, so this sort of pattern is what we're looking for. A trend, a flag, and then the next breakout will give us our optimal entry. So let's just have a look at a few more chart patterns. Let's have a look at the Euro Canadian dollar. So the Euro Canadian dollar is not something that we're particularly interested in. Why? Because the trend is up. Look at the long-term trend. It's up, but it's currently going through an area of consolidation. If we go down to the daily time frame, we've got green XTL bars, an area of black now, but we're above the daily 200 moving average. What price has done is has broken the figure 1.50. You see that's a round number, a major round number. Broke, has come back to retest it. What we're now waiting for is this to hold as a support level, bounce to the upside, a break of this pivot high, green XTL bars, and get stochastic giving a false bar reading is the entry that we're looking for. So again, there's nothing to really do on here. We've got to be standing aside. Okay, let's go to the New Zealand dollar Japanese yen. Okay, the New Zealand dollar Japanese yen is looking kind of interesting. Okay, so if I start with the weekly, we can see that the trend is very much up. The trend has been up since 2012, so May 2012. Trend, consolidation, and now in this next leg up. But if you look on the right-hand side, we've got the figure 90. That's a round number acting as an area of resistance. And you can see that there was a reversal candlestick spinning top and pricing now heading back down. So what we're waiting for is a break and a close above this round number and then a continuation to the figure 100. Okay. Excuse me. Yeah. If we go down to the daily time frame, you can see we're above the daily 200 moving average. We've got green XTL bars. We've got a false bar reading on get stochastic, and price is now flagging. Reason why it's flagging is because 90 is acting as an area of resistance. Now, intraday traders may be going short, but trend traders are looking to go in the direction of the long-term trend, and the long-term trend is very much up. All we're waiting for is a bit of patience, a correction, a break above the figure 90, and then we should see further strength. So, guys, this is what we're looking for. Optimal entries. What we're looking for is a break of the figure 90. Then remember that chart pattern of a pullback and the next breakout. So what we're looking for is a break of 90, a pullback to 90, and then the next breakout will give us an entry. And then we want to see that trend established to the figure 100. Okay, let me go through some questions that are coming through. Okay, please bear with me. I think I answered that question. Someone said, do you look at pivots on the weekly? Yes, I do look at pivots on the weekly as I do on the Aussie dollar. Round number 0.94. No, that's not a round number. Remember, we're looking at 1,000 pips. So 0.80, 0.90, 1.00. The false bar is this bar here, the black bar. What that means is ignore the fact that the indicator is overbought. Ignore that and go long. Don't start going short. Remember, guys, price is the most important indicator. Not get stochastic, not RSI, price. Price comes first. Left of charts, red and green prices mean. I think if you guys are looking at my watch list, what that means is if today's action is bullish or bearish. So if there's been more buying or more selling today. So my watch list changes according to the colors. Which round numbers for JPY pairs? Okay, let's have a look at the US dollar Japanese yen. Okay, so if I open up the weekly, you can see that 100 is now acting as an area of support. The next round number is 110. Below that is 90 and then 80. So each currency pair comes with its own sort of round numbers. You need to get familiar with that. So on this chart, it would be 80, 90, 100. If we look at the pound yen, then with the pound yen, what you're looking at is 160, 170, which is currently acting as support. and then 180. If we go the other way, we got 150. Makes sense. What do you think about the pound US dollar? Okay, if you guys follow me on Twitter, so please follow me on Twitter. I tweeted about the pound US dollar today. A lot of people are trading the pound US dollar. It's not something that I'm particularly interested in. The reason for that is simply because price is currently stuck in a long-term consolidation. So if you have a look at that, price is stuck in a long-term consolidation. The trend is up, and what I want to see is a break of the figure 1.70 at the earliest. So we're looking for price to continue, and it is looking quite interesting because price is headed up. It's pulled back. You can see how it's pulled back to these these pink lines. We've got a tram tracks formation, and price is now heading back up. So what I want to see is a break of this pivot high, and then a break of the figure 1.70. Then I'll start going long. So currently, I am, this is on my watch list. This is an amber status, but not something that I'm currently looking to trade just yet. So a little bit of patience on that. How many pairs on your watch list? Well, everything's on my watch list. So you've seen the watch list on the left-hand side. I also trade stocks. I've got a scanner that scans for stocks, so that's also on my watch list. News. Okay, it's a good question. The only really news that I take into consideration is NFP. And how I do that is simply by keeping my computer closed. So for 2-3 days before, so the NFP comes out on Friday, Saturday, Sunday, Wednesday, Thursday before, I have absolutely no interest in trading NFP. And I have no interest in trading at all. So Wednesday, Thursday, Friday, my computer's closed. I trade back to normal on Monday. All the other bits of news, I mean, if there's a lot of news surrounding a particular currency, I don't trade it. Simple as that. Also, my stops are 200-300 pips away. So intraday noise that's created by news is all taken into consideration. So I very rarely get stopped out based on news. And I don't take into consideration. I don't want to sort of look at the fundamentals of it's unnecessary. As private traders, it's unnecessary because a lot of news has already been filtered into price action. It's late by the time we get it. So there's no point trying to copy the big dogs. You might as well let them move the market and go in the direction of the trend. It's far easier. Yeah, I think you did. Those candlesticks are XTR bars, the green, the black, and the red. PH, yes, that's correct. PH stands for the previous year's high. PL stands for the previous year's low. So this is PL, that's the previous year's low. PH is the previous year's high, and PC is the previous year's closing price. Yeah, there's no pivot column. It's just something that I'm aware of, Drew. I mean, you can create it if you want, but it's just something that I'm aware of. Do you trade futures and options in this way? Yes, I apply the same philosophy to all the markets that I'm trading. Okay, good question. You look at many markets, how many hours do you devote to trading daily with this method? Guys, I trade about 30 minutes a day. So that's 15 minutes in the morning, 15 minutes in the evening. I'm a trend trader. I'm looking at the daily and the weekly time frame. Intraday, what happens intraday is of no concern to me. So my in-depth analysis is done on Sunday. So on Sunday, I prepare for the week ahead. I know exactly what I'm looking at. My scanners have scanned the market, have found all the opportunities for me. I'm looking at those select opportunities from Monday to Friday. And that takes me minutes. And that includes managing my stops. That includes entering positions, entering my compounds. So I'm a trend trader. It takes 15 to 30 minutes a day. The thing about intraday trading, guys, is that it takes up a lot of time. If you've got a 9-to-5 job, or, you're not going to be able to spend time intraday trading. You want a style of trading that can be adapted around your current lifestyle. That's what makes trend trading so powerful, because you can look at it in the morning, you look at it in the evening. 9 to 5, when you go to work, you don't need to worry about it. You don't need to be constantly pulling out your phone, looking at your trades. It's unnecessary. So trend trading takes about 15 to 30 minutes a day, max. That's screen time. The rest of the day, I'm free. How many hours on Sunday? 1 hour, max. Now, it may take you a little bit longer in the beginning because you're getting used to it. So you may require an hour or two a day. But once you perfect it, which takes about 6 months, to a year, it'll take you less than 15 minutes, 30 minutes from Monday to Friday, about an hour max on a Sunday. Okay, I think that's the last question. Yes, only 30 minutes, guys. I've been asked. Look, I know sometimes it's hard to believe, but trend trading requires a shift in understanding of how the markets actually work. It's unnecessary to be pulling trades every day. It's unnecessary to be sitting in front of the computer, 5, 6, 7 hours a day, trading, looking at opportunities. Unnecessary. What you're looking for is large trends. Now, just to finish off, pound Canadian dollar, we looked at that earlier. Now, if we look at the weekly time frame, I've actually been trading this since this breakout, which happened in September of last year. So I've still got positions running along this whole trend. I've got 4 positions running along this trend, and I've leveraged that to about 5,000 pips. And all I've done, each position's taken me about a minute to put in. So for about 5,000, for about 5 minutes work, I've managed to return 5,000 pips. And each position, I don't risk more than 1% on my account. So if my initial position, which had a 200 pip stop loss and a 1% risk, has now returned me over 2,000 pips, you can do the maths and you can see how percentage gains are returned through compounding. Okay. Now, finally, yes, it does apply to all the markets, guys. All the markets. Now, it's hard for people to believe, but yes, remember, the markets aren't always trending. The foreign exchange market is not always trending. It's going through consolidation. What that means is that money's been taken out of foreign exchange. The big dogs, the hedge funds, the institutions, they're taking out money from the foreign exchange market. They put it in another market, the stock market. So all we do is we follow them from market to market. Limiting yourself to just the foreign exchange market is not the correct thing to be doing. You want to be trading all the markets and following the big dogs from market to market. That's the smart thing to do. Okay. Yes, exactly. 2/3 of the time, markets are consolidating. So in that 1/3 of the time where it is trending, you want to be racking up pips. So in about 3 months of trend, you want to be seeing 30, 40% returns. Then nothing for 3 months, and then another 30, 40% in the next 3 months. So by the end of the year, you can see returns of 90% plus easily, if you know what you're doing. And that's tax-free here in the UK. I don't know where you guys are, but in the UK, that's tax-free because it all comes under spread betting. Okay, I think that's the end of my time here. I don't want to go over time, so I'm just going to direct you to a few web pages. This is my website, guys, thetraderscosmos.com. Please contact me. So I also contribute to the Huffington Post. I was invited to write for them. So please read my articles on here. Lots of interesting articles. I have my own YouTube channel. So please follow us on the YouTube. I'm on Twitter. I'm quite active on Twitter. Please also follow my partner and fellow trader, Dean DeLandro. And yeah, that is it, guys. I hope you found that useful. Guys, psychology, there's a question that's come through here at the end. Psychology is very simple. Don't be fooled by people thinking psychology is very difficult in trading. It's not. When you understand price action, when you understand trends, psychology takes care of itself. There's this whole industry built around psychology. And, it is interesting. Don't get me wrong. There's some very good books, but mastering your demons in psychology is not as difficult as people think. When you understand trends, when you understand price action, psychology takes care of itself. Okay, I think that's a very, very good place to start. Guys, remember to think, if there's any questions, get in touch. Just finally, for long-term trends, for success, think long-term trends, please, guys. Okay, have a great, great day and speak to you soon. Take care. Bye-bye.